Welcome to my weekly fundamental review. For this week I will connect my trading strategy with the news. I use correlation in equity index futures to take trades. On my screen there is a demonstration of correlations in the equity markets. This is in the form of a graph. So what you can see is that the blue line is representative of the SPX 500 and the orange one that of the GER30. The graph lines have been adjusted so that the difference between the true values of the markets is removed, i.e. the SPX is worth 2,075 roughly at the moment, and the DAX 10,800 roughly at the moment. So what I've done is normalize the data so that you can chart them better and it's easier to compare, because the two numbers are quite far apart and they have no real relative meaning. So to put them together, just normalize them and everything. So yeah, what this graph shows you is that it shows you the movement of the correlation. So what we can see here is that while the S&P 500 is rising quickly, the DAX is getting pulled up as well, and then they come back together. This is because the S&P 500 was rising too quickly, so it was out of correlation, and the DAX was rising slower, so it pulled it back. And this can happen quite a lot, if you see what I mean. Goes back and comes back together, goes away, comes back, goes away, comes back. And yeah, this interactive move can be calculated mathematically. To do this, I've used a long-term data set, and it's the close price for the S&P 500 and DAX since 1975, and the correlation is 0.934. The maximum correlation is 1. So that is represented here with the DAX, and the DAX it correlates 1. This means for every one move there's always one move. And yeah, so the SPX has quite a strong correlation with the DAX. Although this is a shorter kind of time frame graph, it goes back to 2005 to 2014. So this 0.93 movement is not perfectly representative, but it gives you the picture of how they move. They move together. Yeah. So we've got to ask the question, what could drive these movements in the markets? And to do that, we'll take a look at the S&P 500 graph as well as the DAX or GER30 graph. So if we just pop. So yeah, this is the graph of the S&P 500, and what you can see here is how they move together. It is mainly international effects that drive both the GER30 and the S&P 500 to move together. So we had a good example of that recently, and this was the slowdown in China and the fear it caused to world growth and world trade, as well as smashing commodity prices lower. As you can see, the GER30 has fallen lower. The S&P 500 fell lower quite drastically and bounced back up, and it went down and so on. This move was replicated in the GER30. So if we just flick that up, we can see here that it made a similar move. It broke here at the same time and it fell down and has come back up to form similar moves and came back down. So if we go back on the S&P 500, you can see the same move back down here all the way along. So they correlate quite heavy. Now we're not trying to play them moving together, we're trying to play them back together. That's how I trade. So we're waiting for them to be at disparity. Now the question is, what causes them to be at disparity? And the answer is national effects. And to show this, we will look here on the S&P 500. And as you can see, the S&P 500, since NFPs came out here at the end of the 9th, we saw a strong rally. This is because investors reined in their expectations for an interest rate hike, meaning they saw it further off in the distance. So we saw a strong rally. Now unfortunately for the German 30, it did not enjoy the same rally, and that was due to the VW scandal, them placing defeat devices on their cars and all that. So it just held it down quite strongly. So if you look here, this is the 10th or the 13th. If you compare that to where the S&P 500 was on the 10th or the 13th, it was up here. So a 1 Bollinger Band. These are Bollinger Bands. So this is a 75 standard mean, and this is 1 Bollinger Band. These are like mathematically standard deviations away from the Bollinger Band, the 75 mean. Yeah, so what you can see is they're at disparity as the VW scandal has held down the German 30. So yeah, this is basically what I took a trade on the Friday of last week. We were being held down on the Ger 30 here, and basically I just longed the German 30 to come back to the S&P 500 and shorted the S&P 500 to come back to the Ger 30. Okay, so this plays into this week's news, and news really kicked off on Monday morning, and early Monday morning for those living in Europe, and that was mid-Asian sessions. And this was with the release of China GDP, which came out at 6.9% compared to an expected of 6.8%. We can see the effect of this on the Aussie dollar. So if we just flick up a chart of the Aussie dollar. Yeah, and it was one of the few times that China in recent history has not really just propelled the markets in one direction. I mean, the Australian dollar did strengthen on the news because obviously the Chinese data was better than expected. So we saw a quick rally up. You know, lasted for a few hours overnight in Europe, but during the day in Asia, but quickly sold off again and came straight back down. And as you can see, we finished the day pretty much where we started. There wasn't much move, and this kind of sums it up for the day on Monday for the movements in the markets. I mean, if you go back on the equity chart, so the S&P 500, this is Monday here, and as you can see, there wasn't much moves. And this can be represented on the hourly. We can see quite how tight the price action is on this. If you can see here on Monday, you know, this was Monday. We're really in a tight wedge here. Like, there's not much movement, no direction to it at all. Yeah. However, you know, there was a few notable headlines that came out that should be noted. Data out of the US showed that housing had become stronger. This was in the form of the NAHB housing market index, which came out at 64 compared to an expected 62, and had grown from 61 from the previous month. This is probably why this was slightly bullish day. Yeah. And then in Europe, there was news out of Deutsche Bank, which the bank has been embroiled in scandals and fines that have hurt the profitability of the institution. Deutsche announced restructuring plans. This involved firing two co-heads, one from the investment bank side of the business and the other from asset and wealth management. This is part of restructuring efforts to turn the profitability of the firm through streamlining and simplifying the group. John Crime recently took over as the CEO of the company. This led to a rally in the stock on Monday of 2.2% as investors took it as a positive sign. And it was a similar rally seen when Ashwin Jain was removed as CEO, showing that, you know, investors aren't too confident in the old guard, so to speak. Whenever they go, it rallies. So yeah, says something about the company really. Yeah, and the rise of Deutsche kind of fed through to the DAX. DAX had quite a positive day. If you flick that down to the hourly and show you the 9. Okay, there's Monday. Sorry. Yeah, you can see it really rose on the news. This was when people found out, and we moved sideways. I mean, it's still moving sideways. It's pretty tight. And the gains were just completely wiped out at the start of the next day, Tuesday. So there wasn't any real major news. Yeah. So yeah, how does this work with the trading? Because obviously I told you that I took a trade here on the Friday. So yeah, if I show you a chart of how they have come back together or moved further away, it'll become clearer. So yeah, this was the previous graph that I showed you, this one at the start of the video. This chart here, compounded into a single line. So this is just the distance from each other in one single line. This is where we were on Friday. Yeah, I put Saturday and Sunday in so that reflects the moves over the weekend, but as you can see, from Friday to Monday we came into the trade slightly, so they started moving closer together, which led to small profits. However, it wasn't any major moves, so it helped the trading account, but it wasn't overly great. But yeah, to Tuesday. So Tuesday kicked off with the RBA meeting, interest rate meeting. So if we just flick up a chart of the Aussie dollar, yeah, so this is Tuesday on the Aussie dollar. Yeah, so the Australian Central Bank meeting. The main thing to take was that there was little impression that there was a chance of a rate hike, and the meeting was here, 2 o'clock, and it sold off slightly because people thought, this will raise the cost of money, so there won't be so much cheap money. However, that quickly turned around, and we saw a bullish run, as investors saw as, the Central Bank of Australia being bullish on the sentiment of the economies, thinking that it's in a stronger position, basically. And we rallied up, although, it wasn't a really big market driver. There was no announcements, no shocks or anything. It was just maybe a bit more of a, we're getting better kind of tone. So this came down, and once again we're moving sideways. Yeah, so the actions of the RBA were caused moves, but no major implications. However, there was on another commodity currencies, that of the Canadian dollar, there was quite big news. So just flick over there. So yeah, this is a chart of the Canadian dollar, and this is Tuesday, the day of the election. And as you can see, as the results came out, the USD CAD sold off, meaning the Canadian dollar got stronger. Yeah, so it sold off. The markets took it bullishly, took it positive. Yeah, and it was the first change in government for almost a decade. It was 9 years, and it was a change between Justin Trudeau, was the new Prime Minister, and he's the head of the Liberal Party, and the old guard were the Conservative, or the old government, who had been running for 9 years, but yeah, they were kicked out. Yeah. But once afterwards, the Canadian dollar started to weaken again. As you can see, we moved a bit sideways, but we started coming back up. The reason it could have come back up is because Trudeau's government is aiming for a small budget deficit, making expectations for the government's balance sheet weaker than it would have been under the Conservative Party, as they were intending to aim for a budget surplus. Yeah, so basically by aiming for a small budget deficit, which they're aiming for so they can invest in infrastructure and everything, and by investing in infrastructure they're raising the money supply. So actually what that is, that weakens the CAD, and this could be one of the driving forces behind these moves. So yeah, and I mean, in more micro economical stock news, yeah, the election also sent cannabis stock higher. Alpha Inc., for example, which is a producer of medical marijuana, ended the week 22% higher, and this was due to Trudeau's pledge that his government would legalise it. So yeah. For Tuesday, on the S&P 500, there was some small economic releases, being that of the building permits and building starts. So this is for housing. The starts were slightly better than expected, although building permits were slightly lower than expected. We also had poor data from companies' earnings, which sent the trend lower. So, the housing starts and building permits were mixed. One was decent, one was not so decent, but it was the poor data that then came in and set the trend lower. As you can see, we've got to move down here. And I mean, for earnings, for this day they were lower, but in general they've been better than expectations. I mean, this could be due to analysts lowering their expectations after a turbulent month of August, when we had that massive sell-off over here. and fears coming into their expectations and everything, which means they've lowered them to the extent where companies can beat them. But that's not to take away from the better than expected earnings. Strong quarter for some companies and everything. JP Morgan in particular did really well. Yeah. And I mean, to bring it back to Deutsche as well, so if we could just go on the DAX, it was quite interesting news. So go back on the daily. It was quite strange actually. I've never really seen anything like it. Yeah, so a new junior member on the foreign exchange desk accidentally transferred 6 billion to a hedge fund. Yes, so it's been labelled the fat finger scandal, but 6 billion is a lot. Yeah, and this quickly led to a sell-off in the DAX, which fell 3.2%. And I mean, I've got a chart of the DAX, so if you just give me 2 seconds. So yeah, this was the sell-off on Monday through Tuesday. It just kind of went straight down. I know this is a line chart, so it takes out all the volatility, but yeah, straight down. And the up of Monday of the Deutsche Bank and the down on Tuesday was also represented in the DAX again. So if we take that up, so yeah, here's the chart, the DAX, and as you can see, it's slightly lower. It didn't have too much effect. Remember, we are in this tight ranging play, as you can see on the hour still. On the Tuesday, we haven't had any major moves yet. As you can see, we just sold off at the start of the day on the fat finger scandal. I mean, I don't really know what to say about it. 6 billion. But yeah, 6 billion. Yeah. But I mean, yeah, brings us on to Wednesday really. And Wednesday was the day when we start to see the expectations for interest rate action by the ECB start to cause nerves in the market. And this can be seen if we look at the euro dollar. So let's flick that up. So we can see, yeah, the euro dollar had a fairly muted day on kind of nerves / not willing to take a side on how the ECB were going to act. I mean, the rough consensus from analysts, the economists, traders was that the ECB would take a dovish stance. But yeah, the current currencies are quite a sensitive asset, so they tend to pre-move any action. So this kind of dovish stance could have been priced in from Wednesday last week, sorry, 2 weeks ago now. As you can see, it could have priced in there, and then traders weren't totally willing to commit. But yeah, so we got a bit of nerves for the last few days. Yeah, and there was some other news in microeconomics. So yeah, we'll turn to Credit Suisse. I'll just bring you up a chart of that. Yeah, so this is just the line chart of Credit Suisse. As you can see, it has a pretty bad day. There ain't really way of sugarcoating that. It reported pre-tax revenue that fell 54.41% on quarter-on-quarter basis, from 812 million Swiss franc to 826 million Swiss franc, and it fell as much as 5% after rising slightly before finishing the day 4.4% lower from the close on Tuesday. So as you can see, it just fell, just kept falling. And I mean, this fall was helped by Credit Suisse announcement that it would try and raise $6.3 billion, an action that investors took as a sign that the company was admitting and recognizing weakness within it. And I mean, this with the Deutsche case, the Deutsche show off all the troubles with that, can be taken an example of the tough times that banks are having in the current market and regulatory environment. With this point recently demonstrated by HSBC, who said they were looking to relocate to the US, or they were looking at the US as a possible destination to move its HQ, with their reasoning being that they were feeling inhibited by regulators in the UK. I think the actual quote is they felt them breathing down their neck, or every time they met them they felt animosity kind of thing. So yeah, and I mean, if we look at how this played out on the SPX and DAX, yes, take a look. Yeah, so the SPX sold off for the day. I mean, we were coming back with a strong rally here, so it could be just taking a breather, as there was no real positive news. I mean, it did go up, but it came back down. So, sign of a bit of indecision / need to take a breather. Led it a bit weaker. You know, ECB as well, meeting. No one was really willing to go either way. Came back down here. And then the DAX was a similar story to the Euro, really. If we bring that up and flick that back on the daily. Yeah, so open slightly high, as you can see, it jumped up there, but flat, you know, up and down. And this is an evening star, so this just represents indecision, candlestick way of representing indecision. As you can see, it's really, no one really knows which way it's going. Some people thought it'd go higher, no, it's not going higher. Some people thought it going low, no, it's not going low. So yeah, and I mean, yeah, how did this affect the trading? So if I bring up the chart showing the distance between the DAX and the XPX. So yeah, for Wednesday we had a similar kind of continuation of this slowly coming back together. But yeah, this was all changed on Thursday when only really one word can sum up the rest of the week: stimulus. So yeah, this is a chart of the euro dollar, which is a good one to see what happened on Thursday with the ECB meeting, who, although did not actually pursue any loosening of monetary policy, sent shockwaves through the markets when they gave forward the guidance that monetary policy will be reviewed in December, and they stated that that the ECB would consider using all possible means at its disposal to reach its inflation target. This was taken as a strongly dovish stance from the ECB, leading to expectations being re-anchored to the possibility of more quantitative easing from the ECB and or a lower deposit rate facility, which is already below zero at minus 0.2. And just a reminder, the deposit facility is the bank account of banks. So currently the banks are having to pay to keep their money with the ECB minus 0.2, so they have to pay 0.2% to keep the money with the ECB, and the release posed the possibility that banks would have to pay even more to the ECB to keep their money with them, and this is intended to spur kind of lending, because you're losing money if you keep it with the ECB, so you might as well lend it out and get some return on it. I mean, the euro really sold off sharply on the news. As you can see, this is the whole day, but if we look on the hour chart here, you know, it's instantly moving lower, big boom off, straight down. Yeah, this is about 1% fall within an hour, so that's a big move. And then we just kept going down, Came out of 2 standard deviation moves as well, 2 Bollinger Bands here for the hourly. That's quite a big thing. It's just real strength. Yeah, and the 2 indexes that I'm currently tracking with my trading also had some big moves. So if you take a look at the DAX, yeah, the DAX, it received the highest benefit really from the ECB and its potential to loosen monetary policy. I did previous videos showing this as a good buy due to its relative pricing to other EU equities, and yeah, that was really proven. We had a rise of 3.5% on the day, and it really boomed up, as you can see. It also had contagion to the S&P 500 as well. So if we look at the S&P 500, it really received some good contagion benefit. So it really finished the day stronger. It rose 2.3% on the news. However, there was something interesting that occurred on Thursday, being that of the FTSE 100, which received the smallest benefit of all 3 equities benchmarks, only rising 0.78, despite the UK being a member of the Europe. So let me just bring up a FTSE chart. Yeah, so this is the Thursday, and as you can see, it's not actually that a spectacular move compared to the others. If you take a look at that, and then if we flip back on the German 30, look at that, you know, and look at this. This is the S&P 500. Remember, geographically, the S&P 500 is much further away than UK, and even in Thai's term, the UK is much closer to Europe. You know, this is our main export-import trading partner. And you know, what caused this? Well, I have an opinion. You know, that it's, although the UK has its own central bank, which means they control the monetary policy for UK, it could be due to the lack of reaction. Could be due to the fact that there is a referendum coming up in England over its membership of the European Union. Currently, polls show that the populace of the UK are fairly divided over whether to stay in or leave the European Union. This uncertainty, although not being enough for investors to take money off the UK, as it is widely viewed that the UK would still be strong out of the European Union, it is rather that investors may not be willing to put more money behind the UK 100 due to the potential for it to leave Europe, with the results of a leave from Europe being unclear about the effects. So, you know, there's a bit of uncertainty. So people, although they're easing, people are not thinking, oh, we're going to get this benefit anymore. You know, we might as well, I don't know if we should go in and back it, kind of thing. Yeah, and it's kind of as Mario Draghi said in his press conference, economics doesn't like uncertainty, but democracy causes uncertainty. So if we weren't having this kind of democratic process of a referendum, you know, I think it would have moved slightly higher. We are major, but I think that could be a drive, or one of the drive. I mean, there's always more than one variable, but I think that could have come into some thinking. And then once again on Friday there was more stimulus. I mean, really stimulus, and this was from China. And it took back its status as a market mover that it lost at the start of the week when its GDP figure failed to have a meaningful impact. The Chinese government announced that it would cut its one-year lending rate by 0.25% from 4.6% to 4.35%. This is the 5th time China cut its interest rate this year. And because Asian equity markets were closed at the time of the release, it was released kind of in English time, kind of mid to late morning, about 10-11 o'clock. So if we take a look at the Aussie dollar, which was open, because currencies are always open, we can see that in the morning it had rallied. The Aussie had got stronger, but on the announcement this was totally wiped out, as you can see. Yeah, and this was due to bets being placed that the cut in interest rate by China would lead to more money supply in the Chinese economy, and this would then be imported to Australia, as Australia is a net exporter to China. So the argument is that they're going to import the money supply, and that led to a huge sell-off. Bang, straight back down. We had, you know, just up, went up and back down. Yeah, and I mean the fall in the Aussie dollar had an inverse on the Nikkei 225, which rose on the news. And obviously Nikkei 225 was closed, so we're using futures to calculate this, but it rose 1.3%. Yeah, and I mean, the totally engrossing effects of these two acts of stimulus can be further demonstrated by looking at the two banks that were in the news this week for negative reasons, being Deutsche and Credit Suisse. So if I bring up your charts of that. Yeah, so what you can see is here when the flat finger scandal came out, it led it low, fairly flat, and then the news of stimulus came out and just straight up. I mean, once again, it's a line chart, so it takes up volatility, but if you look at the degree of that there, and that is so strong. This was also in Credit Suisse, which despite having bad data, got a real push as well. You know, had been selling off, up, back up. Yeah, and I mean, if we just go back to the Deutsche one, because it represents it really well, in my opinion, the strength of quantitative easing anyway. Yeah, I mean, this was also really positive in strengthening terms for my trading balance. Yeah, as the ECB news affected that of the DAX more than that of the S&P 500. So if you take a look at the chart of the DAX again. So yeah, just a reminder how much it affected the DAX more. Chart of the DAX here. Big strong move. If we go back to the S&P 500. Strong move, not so strong. So yeah, let's put that back up on the chart of the difference between the two. So yeah, this was the effect of the stimulus action on my account. As you can see, they came much closer together, really boomed down. This was a very profitable 2 days, really helped come together. So yeah, that was a good day, all in all. And I mean, yeah, so let's go turn to our forward looking, what's coming up this week and everything. So let me just get that. Yeah, so on Monday, we have the IFO Business Climate Germany release. This is out Monday, 9 o'clock. This is UTC time. So yeah, and we also have the Bundesbank monthly report, which reviews the lending to non-financial institutions. This could be used as a guide to assess the necessity for the ECB to conduct further monetary policy in December. And we could see any news as bullish for the G30, as worse data would support the need for ECB to do more stimulus, with good data showing strengthening economy, which is inherently bullish to the price. So we could see an up day for the DAX on that release, which should be good. There's also new home sales from the US out in the afternoon. And then on Tuesday, we got continued guides over monetary policy from the ECB with the release of European loan growth. You know, this is one of the main things that monetary policy is meant to stimulate, get loans going so people start consuming and get kickstart going. And then we could have some market moving news from the UK with the GDP release, so watch that. The expectations for the release are for a 2.4% growth rate. So any unexpected kind of release would drive the markets. There are also durable goods orders from the US, which could give a guide to how the American economy is doing, thereby giving an indication of the potential Fed activity. Any raises in the probability of the Fed hike would have a stronger reaction than usual, as it is on a different interest rate trajectory. Now I'm just going to explain the trajectory for you two, so I just got to skip ahead a couple. Now what you can see is after the ECB decision, they are moving towards a more dovish kind of stance, and dovish means kind of lower interest rates, higher QE. So we are moving this way after that thing. This was the drive of those big moves. We're moving this way, and China on Friday going this way. Now this line here has a bit of a question mark over it. Are we going to see good data that could lead the Fed to move this way to more hawkishness, i.e. tough on inflation, that they need to start raising rates off their ultra low level? It's a good question, and it's something to watch anyway, as it will be big effects. Yeah, so watch out. There'll be, if you trade currencies, in particularly the dollar is your base currency, make sure to watch these. And that brings us back to our day. What else is happening for the day? Yeah, so that move, the potential move of the Fed towards a more hawkish or dovish stance, will be supported by the CB Consumer Confidence Index, which is coming out in the afternoon as well. And we have, on Wednesday now, we have consumer confidence for Germany in the morning, and the Federal Reserve announces its interest rates decision. Although at last check on the Federal Reserve website, the press conference has been cancelled for this meeting, so unlikely to be any major effect from the meeting. Basically, it's very unlikely that the first time the Fed raised interest rates in almost a decade, they would do it without giving a press conference, so discussing their actions. This is because it's so unexpected. I mean, the interest rate, the probability of a raise that the markets are pricing in is incredibly low. It's single digits, like 5% at this meeting. So any raise would really shock markets. So I mean, without a meeting and everything, they would definitely need to talk it out at the very least. But it's unlikely to happen that they're going to do anything. So that would be a bit of a lame duck meeting maybe. But I think US durable goods orders would be more interesting, as well as Bundesbank monthly report. I think there's two big ones at the start of the week. and European loan growth, of course, and GDP. It's quite a busy start. And then if we move over to the end of the week, Thursday is our biggest day. And then we've got German unemployment, which again can be used to assess ECB, climate and everything. And we also have European economic and business sentiment being released that Thursday at 10 o'clock. Got US GDP data also out, and once again this can interact with our chart as seen here. You know, will the better GDP move it this way? Probably, you know, and in the ECB this way. You know, we're starting to move further apart on the trajectories, causing some big moves and everything. Yeah, we also have German inflation rate, which once again can interact with our chart. And yeah, Japanese released their inflation rate. This is then followed by the Japanese interest rate decision. So this is quite important because there has been some talk about the Japanese doing more stimulus efforts, cutting interest rates. More QE is more likely than cutting of interest rates. This because there's been a bit of bad data and everything out of Japan. So watch that. Yeah, so it's a busy day on that day. And then Friday we have European area unemployment rate, and we also have a Russian interest rate decision. So I mean that kind of sums it up for this week. And yeah, good trading, happy trading out there and everything. So have a good week. Thank you.